What's up, everybody? YouTube, live, everything Phoenix. This is Monday, the 12th of February. It's almost Valentine's Day. We're going to get into that today because if you have not booked your stuff for Valentine's Day, you should think about doing it ASAP. So it's another benefit of watching our YouTube live. We're going to cover everything, literally everything, including reminding you to book Valentine's Day dinner or get some roses or something, right? If you celebrate that at all and celebrate your spouse. Okay, so we're going to jump in. Enough of that. We're going to jump in and we're going to talk about some housing market stuff, guys. It's been a good couple of weeks for the housing market. So I said I apologize, and I want to apologize because I don't have any bad news right now, currently, for the Phoenix housing market. Now, does that mean it's on fire and everything's hunky dory? No, it doesn't. There's some economic conditions out there that are that need to be talked about. There's a big report coming up this week that we're going to talk about with the CPI index. You had the jobs report come out a little while ago, which are stronger than expected. And so, what does that do for the Federal Reserve? Will they reduce rates and adjust rates down, like we talked about, like a lot of prognosticators are talking about in the year of 2024. So we're going to dive into that a little more here, but we're also going to cover some development, guys. There's some interesting things happening on the development side throughout the Phoenix Valley, the area here. By the way, we call it the Phoenix Valley because it's surrounded by mountains. You guessed it, on almost all sides. And so it becomes a valley where you have the Phoenix area that was settled. So that's why they call it the Valley of the Sun, with well over 300 days of sunshine a year. All right. So I'm going to share my screen and we're going to jump in here and we're going to talk about a little data. And I want you to stay with me on this because it's important. All right. And I love the way the Crawford report said this. They said right here, this is a mixed picture. Okay. All this jumbly jupe up here, right? This data. I made up a new word, jumbly jupe. Closed listing counts remain desperately low at 4,397 per month. That is low, guys. Only up 1.1% from this time last year. However, the number of listings under contract is growing nicely, which is good. Up, you get it, 45% from the dismal count at the start of the year. Up 45%, guys. This is slightly better than the 43% we saw a year ago, but not enough to signal a dramatic change in mood among buyers. We always expect to see strong growth between January and February, and the observation in 2024 is middle of the road. So, Kelly, hold on. You're saying 45% growth over month, January to February, is middle of the road? Yes, that is true for Phoenix because of the seasonal cycle of our market. So, again, you saw what it said, 43% last year, and you're talking 45% this year. So it's up a little bit, which is good. All right, but it's still middle of the road. Let's dive in further. A year ago, the Crawford report was markedly more positive about the market than the general sentiment, with many people unwisely predicting a market crash, unwisely, for last year. There's still no sign of a market crash in the short or medium term, but the big difference between this year and 2023 is a strengthening of the incoming supply. We have more supply this year than last year, guys. We have seen almost 20% more new listings year to date than we did in 2023. Many pundits tend to focus almost exclusively on demand and were dismayed by the weakness in demand 12 months ago. However, supply is equally important, and many of these pundits failed to notice that unusually weak supply was the key issue early in 2023. The weakness has evaporated, although the active listing counts are still low by long-term standards. They are looking much better and healthier than last year. The number of active listings without a contract is up 7.1% over the last month. Last year, they went down 4.3%. So, guys, let's unpack this. What they're saying here, guys, is that last year, there wasn't as much optimism, I guess, in the market, right? Because you didn't see the supply coming onto the market. Well, now it's starting to. Why is that? I think a lot of it has to do with not just new home builders, because there's more of that, but we're talking about in the resale market. I think a lot of it has to do with the fact that the consumer is getting used to what's going on in the marketplace. The rates being where they are high. And we just had this jobs report come out a couple weeks ago, and it was better than everyone anticipated. Now, we can have the argument in the conversation here about what the government's doing with these job report numbers and how accurate they are, because the fact of the matter is almost every single jobs report for the past several months has been changed a week or two after the report what they reported came out. Well, the market moves, stock market and housing market, etc., moves on the news of the report when it initially comes out. When it gets corrected, it's a little bit different. It it doesn't it had an impact. The market moved, and when it gets corrected, there's no big announcement or big anticipation for that correction because we don't even know if it's going to be corrected. And so the market doesn't move as much on that. And so it's interesting to see when you look at the jobs report numbers, will what they said a couple weeks ago actually remain true here throughout the rest of the month of February? We don't know. We'll see. But right now, the market moved based upon that. And the Fed did state they didn't say anything. They did not raise rates. So they did say something. But the anticipators, the prognosticators, the people who had the crystal ball were all predicting that they would not move rates anyway. So the market had that built in, and they did exactly what everyone thought. Now, it's interesting because if you look at the odds, and guys, I don't know if you have to be in Vegas for this, but if you look at the odds, you can actually bet on the percentage chance that the Federal Reserve actually increases, decreases, or keeps rates the same the next time they meet and every time they meet throughout the rest of this year. Pretty crazy, right? You can bet on anything nowadays with these sports books and everything. So the reality is, if you look at the odds that the house, the bookmakers, I guess, the odds makers are putting out there, right now, the odds are that from the next time they meet on throughout mid 2024, the odds get bigger and better and better and better as they meet each time. Meaning that the smart money, I guess the house, if you will, is betting that the Fed is going to actually bring rates down. We'll see. Obviously, if economic conditions warrant something different, that could change the whole game. But as it stands right now, that's the path that everyone has it on. So we'll see what happens. But we're looking at mid-summer, June, July, when the odds are really high that rates will be down potentially, several quarter point drops. When the Fed meets, they are typically going to reduce by 25 basis points or a quarter point. They can go more if they want, but most of the time they don't unless there's something really, really drastic going on where they feel they need to catch up on. Okay, so let's go back to my screen here and finish this off because this is interesting in my opinion, guys, and hopefully you're getting a good response out of this. And if you wouldn't mind, ask a question, comment in our YouTube live here. I love to know what you're thinking. We have a lot of people on here watching live right now, so let me know. By the way, where are you watching from? That would be kind of cool. Wouldn't mind seeing where you're watching from. That way we can it helps the algorithm actually curate the content for those people in those areas of the country or the world. So, guys, really appreciate you for watching. If you don't mind subscribing, that would be awesome as well. And like our channel, Everything Phoenix. All right, here we go. A year ago, the conference report was markedly more positive. Okay, but again, I want to highlight this word: unwisely predicting a market crash. Guys, did you know that we had positive appreciation throughout the marketplace, and so there was no market crash? Now, it is always good for a seller to have less competition from other homes. In some price ranges, the competition has increased dramatically since the start of the year, but in others, it has been barely changed at all. So here we go. Single family active listings priced at $2 million. All right, so we can segment this out per the price point your house may be in or the one that you want to buy is in or above has increased by 28% over the last month. Okay, that is unusual. Active listings priced between $500 and $2 million have seen an increase of 8%, pretty normal for this time of the year. And single-family active listings priced below $500,000 have seen a fall of 0.2%, which is on the low end, and is still experiencing a tight supply. Now, the good news is the home builders, guys, are really building a lot of homes. These production builders, the track home builders, the D.R. Hortons of the world, the Pulte's, Shea Homes, you name it, Richmond American, they are building more track style homes that are on the smaller side and therefore a little bit cheaper in that $500,000 or below. Now, obviously, they're building some that are above that too as well, but the majority are in that segment, which is good because right now it is tight market supply. The affordability for the average person has increased dramatically over the past several years, and so therefore those smaller homes are becoming more and more popular. All right. So now you bring it back over here. Prices are up almost 8% from this time last year when measured by average price per square foot. Let me repeat that again. Here we go. Prices are up almost 8% from this time last year when measured by average price per square foot. They are up almost 5% if measured by median sales price. Home prices are up more than the Consumer Price Index, CPI. Market crash forecasters got this completely wrong, and buyers who follow their advice to wait have made a costly mistake. Guys, this is why it's data over drama. Listen to this channel. We will give you the facts. If the Cromford report says the market is going down and they see a crash looming on the horizon, and they believe that, it will be backed up by data, and I will give it to you on this channel so you will know exactly what's going on. But guys, the people who waited for that market crash in 2023 that everyone thought was going to happen, that never did happen, just lost out on 8%, potentially, depends on what metrics you go by, 8% of appreciation on the house they could have bought if they would have pulled the trigger and purchased the property. So hopefully you're looking at the data when it comes to these decisions you are making. Volume remains weak, but the overall market is still tilted slightly in favor of the seller. With the Cromford Market Index stable around 117 to 118, this tilt towards sellers is weakening in the upper price ranges. However, buyers with more than $2 million to spend are probably thinking about flexing their negotiating muscles. That's right. If you are buying $2 million or more, you have a little more leverage when you go to buy. Let's see what else they came out with here just yesterday. The percentage of list price that sellers achieve with the contract price is up currently from 96.61% a year ago to 97.58%. Guys, what that means is that if you are a seller, you are selling for 97.5% of the asking price that you're asking on average compared to last year at 96.6%. So it's more money in your pocket. That's never a bad thing, right? This reflects a more positive mood than we were seeing 1 year ago. At 117.5, the CMI index is slightly lower than it was last year at 120, and it is not showing much momentum in either direction. While last year it was moving steadily higher. Okay, this is interesting. Here's what it goes on to say. Messages from the data are giving us mixed signals. Okay, the signals are weak as well. Demand is improving, but so is supply. Normally, this will lead to greater volume, but any growth in sales is so slow that it is almost imperceptible when seasonality is taken into account. Last year, we saw a 60% growth in listings under contract on February 11th compared to the start of the year. This year, growth is at 59.9%, almost identical. Very slightly worse and starting at a lower base point, although there's not much to get excited about if you are longing for positive movement. On the other hand, there's not much to get excited about if you are hoping for a market to crash. I have nothing to satisfy either of these positions. Arizona is famous for its boom and bust real estate cycles, but at this moment, it is very much stuck in neutral. All right, guys, and you go down here and you look at the CMI for the different cities. So what city are you in? What city are you interested in? Well, you have it right here. Oddly enough, the two, I should say, suburbs with arguably the most seasonal activity that are typically going on, Fountain Hills and Scottsdale, are both in the red, down -6 and -2%. Interesting. However, they both are still above the 110 that is a balanced market. So it is still a seller's market in both of those markets, even though month over month or week over week, month over month, excuse me, it went down a little bit. And then you have Chandler and Gilbert, the Southeast Valley, still just crushing it. I mean, crushing it. Then, of course, you have the Southwest Valley area, Buckeye, Maricopa, Goodyear, excuse me, Maricopa not really, the more south, not west, but yeah, Buckeye and Goodyear Southwest that are kind of bringing up the rear again. And then Maricopa and Queen Creek on the Southeast Valley, the far Southeast Valley, is not doing as well as Gilbert and Chandler, albeit it is in a buyer's market at 85.1 right here. Okay, it's interesting. It's very interesting when you say lease. Now look at a few more data points here, guys. Annual appreciation. This is interesting. You can see right now this goes back to 2001. Look at those gains. Look at those losses, and you can see that there was a ton of appreciation when the housing bubble was at its height, and it crashed. It popped, and depreciation set in big time here. Okay, everything that was gained pretty much over these years right here was wiped out right there in the housing recession, the Great Recession. Okay. And this is Phoenix. This is Phoenix, guys, not nationally. This is just for Phoenix, all right? And then you have this appreciation that continued after this long drought from 2006 all the way through 2012 with almost no appreciation. You had a little bit right here when the first-time home buyer credit came out, if you remember those days. And then you have some appreciation that was pretty good, and then it kind of just went back down, and then it kind of steady appreciation all the way along here until 2021 post COVID. So these events are triggering certain things. And of course, we had some depreciation in 23 from where we were in 22 and then back up to 24 here. Okay. So that's an interesting chart I thought I want to show you really quick. And then if you were thinking foreclosures were a thing that are starting to happen, I would say you need to think again because right here is the color for 2024 and it went down even though it's only been a few weeks in January since this was measured, but it went down and it's still in that same range as 22, 21, 20, and 23, which is very, very low in foreclosures. Now, how low is this? Well, let's compare and contrast this. Let's go to the height of the foreclosures in Phoenix, which is 2009. Here we go. Boom. Oh, look at that. There is '09, this brownish orange color. And then here's all the 5 years since 2020 right through here. It is a blip on the radar when it compares to 2009 when we truly had a huge market crash. So very interesting in case you wanted perspective on that. All right. Now we're going to jump over here to some development stuff. This is good stuff. All right. White House announces $5 billion in semiconductor center sought by Arizona officials. Guys, the money keeps pouring into Arizona for the semiconductor market. All right. The federal government said it will invest more than $5 billion in national public-private consortium that will support research and development of advanced computer chips. And again, guys, Phoenix continues to be the Silicon Valley of the Southwest, right? White House officials on Friday announced plans to invest in the National Semiconductor Technology Center, which will consist of a network of several advanced computer chip research and engineering facilities in the U.S., in addition to the public-private consortium. All right, they're going to drop some money, and they want to make sure we are leading the charge for the semiconductor industry. Arizona makes case for a headquarter as well. ASU gets chip funding from the ACA, and it is bananas what's happening on that sector. So we won't bore you with any more of that, but it's really good stuff for the local economy here when it comes to Arizona. Now, let's talk a little sports business. Now, we just had the Super Bowl. We're going to talk about that here in a second. But the local sports business here for Phoenix was the Waste Management Phoenix Open. All right. And guys, it got crazy. Now the weather was a little wild, but guys, you look at this little screen I shot right here, and let me tell you, it was wild out there with the rain and the wet and the mud, and then you had hundreds of thousands of people there every single day. But looky here, what happened? Ticketed fans denied booze and entry, and they cut off the booze because there's too many beers being sold and other stuff being sold there. It got a little crazy at the Phoenix Open. The Phoenix Open, known as the greatest show on grass for its often rowdy fans, as hole number 16 ran into an unprecedented territory on February 10th at TPC's castle when tournament organizers shut down admissions. That, to my knowledge, is the first time ever, and halted alcohol sales due to an overcapacity issues. Now, it was awesome, by the way. I went out there, and it was a blast. But this is crazy how they actually shut this down. I'm surprised. Abby, what's going on? Waste Management Phoenix Open was a little wild this year. I get that's the point, but holy moly, the videos were crazy. They were crazy. And thank you for commenting because I saw the craziness with my own eyes when I was out there a couple times. It was wild. And then, does anybody even know who won? By the time it actually ended with a triple overtime, playoff hole that Nick Taylor actually won from Canada. Oh, Canada. Good job, Nick Taylor. This is very good. I'm glad that you won, I guess. I didn't really have a dog in the hunt. I do like Charlie Hoffman. I really was hoping Sahith Tagala would win. I kind of like that guy. I don't know why, but I like his style on the golf course. But he did not win. Charlie Hoffman got second in a playoff three-hole playoff tournament. So pretty cool. We got another Charlie Hoffman fan. I like it, Abby. I like it. I like his. He's wearing green. He always has little curly hair at the back of his hat. Typically, I just like his style out there. He's a cool dude. All right. But it was wet. It was wild. It was rainy, something that we never really had in the past, at least not too often, that much rain. It was a lot of rain, but we got through it, and the winner was declared or won during the Super Bowl, which at that point, most people had moved on to watch the big game. But nonetheless, it was a good time, guys. If you had not had the chance to go out to WM Phoenix Open, you need to book flights right now for next year if you can, because it is a spectacle to be seen, and probably one day is good enough. It's pretty wild out there, okay? All right, so we're going to go back to the screen here, and we're going to talk We're gonna come back to that one. We're gonna talk the Nick Taylor. There he is. WM. We're gonna finish this off with a little sports business, and he shot a 60 to tie a course record that was tied for first place after round two on February 9th. That mustache, let me tell you, that is impressive. Good job, Nick, on the mustache. But Scotty Scheffler won the last 2 years, number one ranked player in the world, but he came close actually, but did not win this year. So you got all kinds of outfits. It's just great out there. Look at these guys dressed up in all red and black, doing something kind of mischievous, I'm sure. And then where we have the Super Bowl, guys, I'm going to get the Super Bowl here. The cannabis business envision a future aligned with the management WM Phoenix Open. So that's interesting. And then we have Republic Services. Yep. And then let's go here. The Super Bowl just happened, right? Just happened. It is awesome. Is it worth paying $7 million for a Super Bowl ad? Now you know what it costs to pay for an ad, but is it worth doing that? And it's amazing what they talk about, guys. By the way, what was your favorite commercial during the Super Bowl? I'd love to know what you thought was the best one. There's some good ones out there, but $6.5 million plus your production cost. So good job on Super Bowl. And by the way, are you happy or mad the Niners won or lost? Are you a Chiefs fan? Who were you rooting for? I was rooting for the Chiefs. Or excuse me, I can't believe I just said that. I was rooting for the Niners because I'm a Broncos fan and we don't like the Chiefs. So they did lose, unfortunately, and hopefully it'll be next year. But I tell you what, if no one beats the Chiefs next year and they go a three-peat, then you have a great case for Patrick Mahomes being in that GOAT conversation. But until then, he's not. I mean, Tom Brady has won 7 Super Bowls, 7, and he played in 10. So until then, Patrick has a little ways to go. But my goodness, he's on a roll right now. Okay, let's keep it going. If you like visiting Arizona, there are 3 Arizona properties named in the top 100 U.S. hotels. You might want to know what these are. I would like to know what these are if I was going to visit a place that I like to go to and hang out. Here we go. The Enchantment Resort in Sedona. Look at that. Beautiful, 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 beautiful. All right, here we go. So Arizona has several of these resorts, and the number one is Sedona's Enchantment Resort, the highest ranking Arizona hotel, coming in at number 55 on the list of top 100. All right. And by the way, Sedona, it is about an hour and a half drive north, I-17, from the Phoenix or North Phoenix area. Okay. And then you have, let's see, Castle Hot Springs. It was renovated and reopened in late 2010s, came in at number 79 on the list. And that's located more than 1 hour northwest of Phoenix. And then coming in at number 81 was the Ritz-Carlton Dove Mountain, which is located north of Tucson in Marana. Now, I don't know what the results are or what they were judging this off of, but man, the Phoenician, that's phenomenal. So that definitely should be up here in top 5, in my opinion. But there's the list right there. And you can see a few other ones. There's the Phoenician coming in at 44, which is way too low, in my opinion, for Arizona. Four Seasons is really, really good, too. There's some good ones on here, guys. I can't believe they didn't make a higher list, but there are nice places across America, so I get it. I do get it. Lori, what's going on? Terrible weather, but the concerts were great. Yes, they were great. And I tell you what, I heard that Wednesday nights was really, really good with Hardy and Bailey Zimmerman. Speaking of concerts, how about the Super Bowl and Usher? Can we get? I mean, that was outstanding. Usher brought little Michael Jackson back into the mix, and I tell you what, he was phenomenal. I thought that was one of the best halftime shows for Super Bowl I've seen in a long time. Speaking of Super Bowl, Taylor Swift won her first ever Super Bowl. Taylor Swift won nothing, Abby. Nothing. Matter of fact, I wouldn't be surprised if her and Travis Kelce weren't even a thing 1 year from today. I'm just going to put it out there. Okay. I'm not hating. I'm just saying it looks a little too staged for me. That's all I'm saying. Anyways, what do you guys think? Think it's staged? Taylor Swift? Travis Kelce? I don't know. I think it's not real, in my opinion. All right. Okay. Speaking of dating, Open Table Polls reveals Arizona's top romantic restaurants. Where might they be? Valentine's Day is coming up. And so we're going to tell you about where that is. Here we go. This year, 34 states made the cut, with Arizona landing at number 4 for the most swoon-worthy restaurants. The Grand Canyon State tied with North Carolina, New Jersey, and New York and Pennsylvania, which had 5 restaurants each on the list. California snagged the top spot with 12, followed by Florida and Virginia. Where are they located? Here we go. The Arizona restaurants that made the list were Cafe Monarch in Scottsdale, amazing. Dal and DeLucia, Ristorante Italiano. I'm not Italian, so I can't even pronounce that correctly. In Sedona, and Lawns at the Hermosa, which is amazing. I love lawns in Paradise Valley, and Mariposa in Sedona, and Vivace Restaurant in Tucson. If I said that correctly, again, I'm not Italian, so forgive my butchering of those pronunciations. But there you go, guys. If you want to know where to eat at the most swoon-worthy restaurant in Arizona, that is your list. Cafe Monarch tops the list in Scottsdale as number one. All right. I can't even. She's a billionaire. Oh, Abby. Abby must love Taylor Swift. I'm getting the vibes here that she loves Taylor Swift. But this is about the NFL and Super Bowl, not a concert. Okay. So, and she's a billionaire. I do have to admit that. So yes, she does kind of win a lot. I'm sure because of that. All right. Here we go. Last but not least, I want to end on this luxury mixed use development in Peoria slated to break ground this summer. That is cool because right now in Peoria, there's not a lot of luxury stuff, and Peoria is booming. Okay. The proposed Stadium Point mixed use development in Peoria is slated to break ground by the summer of 2024. Peoria deserves this. I'm so glad this is happening. Okay. It is expected to boost Peoria's P83 Entertainment District, which is by the spring training area. Could break ground as soon as this summer, according to the master developer, Steinpower Properties Incorporated. What it is a 1 million square foot development, which has been planned since 2019. It will include luxury, lifestyle apartments, hospitality, retail, restaurants, and Class A high-rise office spaces. It's very close to the spring training facility for the Seattle Mariners and the San Diego Padres, which are coming up here pretty soon with spring training and baseball right around the corner. So, guys, I love this. And there's the map right there. So you can see the Peoria Sports Complex, and it's right in that area where a lot is going on just inside the 101 loop. If we zoom out a little bit, you can get an idea right here where it's at. There's the Peoria Sports Complex. And then you have North Phoenix right here and Scottsdale on this side. So awesome. I'm really excited about that. Good job, Peoria. And last but not least, let's just cover the rates real fast, guys. I want to make sure you guys know where the rates stand because it's very important when looking to buy or sell a house and engaging the housing market. Right now, they are at 6.96, back up to almost 7. So because of this jobs report, etc., it went back up. But I'm guessing when the CPI comes out I think it's tomorrow, CPI report. Matter of fact, let's see when it comes out. I believe it's tomorrow. Quite day ahead of Tuesday's CPI. It is tomorrow. When that comes out, I would not be surprised if there's a short little spike downward of the Treasury 10-year, and therefore rates come down a little bit as well. You can see the Treasury right here on this graph. And as it goes down, so do 30-year fixed mortgage rates typically. Has nothing to do directly with the federal funds rate that the Federal Reserve controls, but it does play off the sentiment of what they're saying and the momentum if they're going up or down. Okay. So big report tomorrow with the CPI coming out. We'll see what happens. If you're looking to lock a interest rate and you have a house under contract, maybe today would not be the best time to do it. And maybe just let that float until tomorrow to see what happens. But don't take my word for it. Consult your local mortgage lender. All right, guys. As always, thank you so much for all the participation and for listening. And if you ever need anything whatsoever, call us at 480-660-5974. We would love to help you out with anything real estate related for your specific case. And don't forget to subscribe when you get a chance to our channel. Thank you as always, guys. And until next week, Phoenix, keep it classy. Take care, guys.